Africa, the world's youngest, fastest-growing continent, is now the new frontier of global investment. Over $150 billion in new deals, projects, and development funding is flowing into Africa's markets, sparking a modern-day gold rush for influence, resources, and opportunity. But beneath the headlines and press releases lies a deeper question: who's really winning in this high-stakes economic game? Is it the foreign powers writing the checks, or the Africans rewriting the rules of the global economy? Let's find out. Over the past 5 years, Africa has seen a surge in foreign investment unlike anything in its history. From 2019 to 2025, more than $150 billion in combined public and private capital has been pledged or invested across sectors: infrastructure, energy, mining, agriculture, technology, and manufacturing. At the center of this transformation are three key regions: East Africa, led by Kenya, Ethiopia, and Tanzania, becoming tech and logistics hubs; West Africa, where Nigeria and Ghana are attracting oil, gas, and fintech capital; Southern Africa, led by South Africa's diversification and Zimbabwe's mineral wealth. According to UNCTAD, foreign direct investment into Africa rose by 64% in 2024, the fastest growth of any region globally. Europe is leading the charge. The EU's $150 billion Global Gateway Initiative aims to rival China's Belt and Road by funding sustainable African infrastructure. Germany, France, and the UK have all launched new Africa strategies focused on renewable energy and digital trade. Meanwhile, the United States Prosper Africa Plan has mobilized over $80 billion in private investment since 2019, and China, the longtime leader, is adjusting its role from pure lender to joint developer, with strategic focus on green tech and minerals. So where does the balance of power stand? Europe's re-entry into Africa isn't just about profit, it's about survival. Facing an aging population, energy shortages, and growing dependence on global supply chains, European nations now view Africa not as an aid recipient, but as a partner of necessity. In 2023, the EU-Africa Summit redefined relations: mutual growth, not charity. France pledged $30 billion for African startups and renewable projects. The UK signed new trade compacts with Nigeria, Kenya, and South Africa worth billions. Germany backed massive solar projects in Namibia and Morocco. But Africa is playing smarter than ever before. Gone are the days of one-sided deals. African governments and investors are negotiating joint ventures, demanding local manufacturing, and pushing for skills transfer instead of raw material exports. As Kenyan economist Dr. Bitanj Ndemo says, Africa no longer sells its potential, it's now selling partnerships. China's shadow still looms large. Since 2000, China has invested over $1 trillion in Africa, building ports, railways, and cities. But recent years have seen Beijing pivot away from heavy lending and toward strategic co-development in energy, EV batteries, and rare earth minerals. China remains Africa's largest trading partner, with bilateral trade exceeding $280 billion in 2024, dwarfing Europe and the US. Yet many African leaders are now diversifying, eager not to depend solely on Beijing's financing. Countries like Zambia and Angola renegotiating Chinese debt, while others like Kenya and Ghana are inviting Western and Gulf investors into sectors once dominated by China. In essence, the new African investment map is multipolar, and that's exactly how Africa wants it. The most overlooked winners in this $150 billion rush: Africans themselves. Over 75% of new startups in Africa are locally founded and led. African billionaires and sovereign funds are reinvesting into fintech, agriculture, and renewable energy. Nigeria's Dangote refinery, a $19 billion megaproject, is proof that Africa can build globally competitive industries. Kenya's M-Pesa, Egypt's fintech scene, and South Africa's renewable startups are reshaping not just Africa, but global innovation models. Meanwhile, intra-African trade through the AfCFTA African Continental Free Trade Area is unlocking a $3 trillion market, the largest in the world by population. This internal shift means that for every dollar of foreign investment, Africans themselves are generating two more domestically. For Europe, investing in Africa is both an opportunity and a necessity. The continent's youth, minerals, and green potential are key to Europe's digital and energy future. But competition is fierce. Turkey, India, and Gulf nations are rapidly expanding their African presence. By 2030, Africa is expected to attract more FDI from Asia and the Middle East than from Europe. European leaders now know, whoever partners best with Africa defines the next global economy. So, who's really winning? In truth, everyone who plays smart. Africa is winning sovereignty and leverage. Europe and Asia are winning new markets and resources. Global investors are winning access to untapped innovation and demographics, but the ultimate winner, the African entrepreneur building, innovating, and redefining the global balance of power from the ground up. By 2050, Africa will be home to 2.5 billion people and a $16 trillion economy, larger than the European Union is today. The investment rush isn't ending. It's just beginning. Africa's story has always been told by others. But in this century, the continent is writing its own chapter, and the world is paying attention. $150 billion is only the start. The real wealth is in Africa's people, potential, and partnership. This is not a race to own Africa. It's a race to understand it.